Alright, the recording is on. Welcome to the webinar, guys. Sorry for the late night webinar again, but unfortunately we are a cricket crazy country, and I just wanted to see what happened to the match because it was getting real interesting. So good luck. Okay, nevertheless, without wasting much time, so let's quickly pounce on to see what's happening, right? So I have opened the OI chart, the OI data, the open interest data for the calls and puts. Okay, so as you see, we are there in that zones of uncertainty, right? So between 0.9 and 1.1 we call it the zone of uncertainty, and if I took those calculations here with 32,549 divided by 32,463, we are at that exact 1, right? Just a little above 1, but we are below 1.1. okay, so what happens here is a big question a lot of folks should be having. It is correct to have this question, and let's see what the markets are trying to tell us, and where the things are getting built and what's happening. Okay, so if you see the 8,700 strike price over here, okay, if I did the math between the put and the calls, it is 10 lakh divided by 30, right? The put call ratio. So it is 10 divided by 30. Okay, so it is 0.33. This is dismally low. Okay, so Nifty to survive at 8,700 when it's getting there tomorrow, right? It's going to be real challenging as long as this is not going to shift to 0.6 and start climbing upwards. It is now currently at 0.33, so even at 0.5 this is going to face resistance even if it came there with TCR. Okay, so runaway market from here, it's not going to happen. But how is the markets going to behave from here? That is a $1 million question which a lot of people have, and we should see how it's going to stack up and perform, right? So that is something that everyone has been curiously, eagerly waiting to see what's going to happen. Okay, but as we saw, there was no much confidence here which was getting built because the call writers got butchered in Jan, especially on the expiry day. That move that you saw, it was a mammoth move, right? So I have been telling that the smart money or the money is trying to go and move this market because it was trapped very badly, and they did move it, and they did move it big as expected. So we made some good gains by buying the put and the call that day. It was okay. We exited at around 70. The full lot was taken out. It then went up to 9,800. That happens on an expiry day, but as long as you make money, that was still okay. Nothing to feel bad about. Okay. So having said all this, where is that confidence that is coming in for the Fed series with the budget in place, right? So we have our budgets coming up. So early next week, after this week, the week after that, we would have our budgets coming up, right? So once we are there, we'll see how it goes and what happens. So budget day, the suggestion is don't trade unless and until you're okay to keep switching the trades on that day based on the equilibrium point. Okay, so now we have moved away from all the noises to something which is pretty definitive, that is called equilibrium, and we'll continue to deal with it. Okay, so it has been working super good, and the team over here is improvising on it, making it better, and it's only getting far better from what I've been seeing, and it's working fantastic on Bank Nifty. Forget the Nifty part of it, it's working fantastic on Bank Nifty. So there is where we want to start moving into our intraday trades, because there is where a lot of money sits. Okay, so slowly even I'm getting a hang of Bank Nifty for the intraday swings, and we should be there. So we'll be trading primarily Bank Nifty. So this have been telling you folks that we have been doing in the backdrop without informing you guys. So we will definitely move into the Bank Nifty domains very soon. You will only see Bank Nifty calls coming. Okay, so trades coming. So that is what it is. And 8,700, as I told you, it's going to become very difficult for Nifty to scale out on spot. So if 8,700 is going to become very difficult for Nifty to scale out on spot, where is that first support coming, and where do you think that markets is going to come and stop? Okay, the first support is immediately in this gap zones that we had, the 8622 to 8640 zones. So this gap zone, if you see the volume profile here, even this is missing. So this is going to be a first thing. If it breaks this, it is pretty obvious that it's going to collapse and come down. to what an extent can it come down? That is another question. There is another gap which is sitting over here between this 8520 to 8530 zones. Okay, and the value area low of this is at 8543. So if this market was to be a uptrending market, this profile gap that you see here, the gap here is what's going to hold on. Okay, so this gap is where it's going to hold, and from here is where it is going to start moving up. Okay, I don't see a runaway markets from here for two reasons. One is, if you looked at the options data, the straddles, okay, so we were tracking the straddles effectively have started moving up. Okay, so deep in the money straddle, that was the 8100 straddle that we were tracking, is now come up and it's gone into that resistance zone. Okay, the same thing has happened to this blue straddle. If someone were to take this top, we have effectively come to that top. Okay, means the straddle writers here are in for a frenzy here, means it has gone to its peak most values, the deep in the money calls. Okay, so when this happens, when this happens on the strike on the deep in the money, it is going to give you some resistance, means there is going to be some decay over here before this starts moving any further to any other place. Okay, so that is something that one needs to take note of, one needs to be cognizant about, and from there we will take it and see where it goes. Okay, so this chart is fully not loaded, so it's gone a little higher, all this, but the straddles have gone into superheated zones. Okay, the 616 of the 8100, let's bring in, the chart is not loaded yet, so I'll go and open this 8100 straddle. This is sitting at 584 and this is at 17.35. okay, so this is effectively 11, okay, and 17, right? So it is 9, 10. So this is at 600 something. So 600 something is where this is currently sitting. At 650 it is going to face resistance. Okay, means another 40-50 points is what we can see for a upside on Nifty from here. So if the value of Nifty spot at 8641 goes towards another 40-50, that is towards 8700, it means we are going to peak out. Means at 8700 we are not going to survive here. The survival becomes difficult for this strike. Okay. My options chart also is telling me the same thing. Another 40-50 points from here, if Nifty were to gap up tomorrow or were to move up by 40 points tomorrow, that move will not sustain at 8700. It needs to see a definitive correction coming in place. Means it needs to come back and test its prior supports. So when I go from here to 8700, what will be my prior supports? It can be at 8625, okay, or it can be the scale up which happened here, which we call as the single prints, okay, to 8650 or 8660. So if you were a smart trader, if market goes up by another 40 points, take a 20 pointer stop on top, okay, from where it was left off, okay, and from there we'll go short and we'll see what happens to the market, okay, and we will take it from there. That is one thing that has to be done, okay, so that is very, very important, okay. And the other thing that I wanted to talk about is, let's get here to this equation, okay. So we'll go here, select the index futures, then we'll go select, Nifty 50, okay, year is 2017, expiry is Feb, where is my Feb expiry, 2022, okay, and we'll take our standard, that is our 90 day, okay. So when I take my 90 day and I'm coming down, if you see, the first double digit move over here came here, okay. So this was my first double digit move at 8457. From there I further scaled up, okay, and if you see over here, okay, there was a sudden upsurge over here at 8662, okay, that was my high, and after that it's again come down and it's sitting at 8698 was the high, which is 8700. Futures went to 8700, okay, but spot did not go. I am talking in terms of spot here, okay, because my options data that I took and showed you is in terms of spot. So future over here is closed at 8671, another 40-50 points from here, okay, means it is close to that 8710 to 8720 zones. If you're getting Nifty there closer to 8700, take a 40 pointer stop, 8740, go short on this market, see what happens. Okay, so if you are doing this short, my logical points from 8700 drop would be to see if my 8660 is going to sustain or not. If 8660 is not going to sustain, then for me this drop is definitely going to come to 8600 on the Nifty future to start with. Okay, once you are coming here, now what happens over here? Your PCR is sitting at 1. If this drop is coming, your PCR is going to tend to reduce. So if it is tending to reduce, it's going to come down to 0.9. Okay, 0.9 can happen at 8600 or 0.9 can happen at 8540 also. Okay, so between 86 and 8540, we need to again tread cautiously over here. Okay, if this market has more legs on the upside, this market will try and reverse between 8544 and 8520. If this is not going to hold, okay, then this market is going to come to test this gap zone this time, which it left while going up, of 8330. Okay, this is the swing objectives that we have kept for this market. So till 8740 is taken out on top on futures, the writing is on the wall that you will not take any further long positions on this market. Is this clear? Okay, that is point 1. If 8660 were to break, this market is definitely going to come down to 8600 for sure. Okay, there is nothing called for sure in the market. It is a high conviction drop that we are telling that it is going to come down to 8600 if 8660 breaks over here, which is probably going to happen because this market is going to find it very difficult to survive at 8700 spot, which is 8740 future. Okay, so if it is coming down to this zones, all right, so what happens here? There is going to be little more selling pressure because people are expecting this market to come down. If it came to 8600, they will push it down to 8540. Okay, 8540 is the zone of OTF. If OTF needs to step in, the other time frame players, they have to step in this zone between 8540 and 8520. This 20 pointer zone is going to be your stop loss to try this stunt long to see if OTF is really going to kick in. If they are not going to kick in, this market is going to drop down to 8340 or 50 to 8330. Is this clear? A quick yes, no? Charles says yes. Anyone else? It was clear only for Charles. Abdullah says yes. Only to 2 of you. We are 9 here at this late night hour. Sangeeta, Sounder, Nevilson says yes. Sounder already said yes. Okay. Sangeeta, in sleep. Wake up. Okay. So Sangeeta is also clear. Fantastic. So since you guys are all clear with this, right? So this is the view that I am carrying with the markets for now. Okay. And we are going to now cautiously watch what this is going to do at its highest point. So if it gets to 650, 8100 is going to have a serious drop, okay, in prices, because it is shot up and shot up a lot. Okay, so if someone is looking to sell the straddle, the best straddle to sell here would be 8100 straddle. Okay, the call and the put, it does not make sense for a lot of people, I understand, but this is probably going to have the most drastic fall, the 8100 call option premium. Okay, so because it's piled up a lot and it's going towards resistance, it's almost there. So if the drop is coming, that is going to be little vital for it. If you want to play safe and if you want to see what is the best straddle to sell, this is going to be your next option. Okay, so at 8700, okay, the straddle is sitting at 124 and 150. Okay, cumulative premium of this is now going to be 274 or 275 bucks. Okay, so if you are able to sell this, okay, for 275, this should give you that leverage. So 275 if you sold, it in other words says, if 8700 minus 275, okay, to 8430, if the market drops, it is going to find support till that point, or if it goes up by 200 points, which is 8990, it is going to find resistance at that point. So for this series, okay, no come what may, okay, market will not break 8990. So let's add this, right? So 150 plus 124, how much is that? 274. Okay, so let's generalize it and say it is 275 plus 8700, that is 8975. So the markets will not be breaking 8975 on the higher side. This is my spot values, not my future values. Okay, and 8700 minus 275, okay, 8425 on the downside. This is not going to be violated, is what it's currently telling me. Okay, so if I'm coming here, where is my 8425 on spot? So future can be another 20 points premium there. Okay, so if you're coming down between the zones of 8449 or 8450 to 8440, okay, this is where it is going to try and find support, is what it says. So if it is coming down, we were expecting that if this breaks, it would probably go down till here, but my option data tells me that I could be stopped out here. This market fall can stop here and again start moving further up. So we will see how that spans out for now. But keeping the way in which these option premiums have played up the snakes, it is now going to become a mouth-watering shot for a lot of folks. Okay, so that is the intent. Okay, so this is February series, right? So this is some homework that I want to give you, or some assignment that I want to give you folks to just sharpen your mind. Okay, this AFL I'm going to upload right after this webinar onto our group. Okay, what I want you guys to do is, okay, open this AFL, do the same activity for the March series, okay, and find out which is trading at the highest peak. Okay, that straddle should be the straddle that you're going to short. For example, okay, on January 1st, okay, 1st of January or 30th of December, this straddle that was 8600 was trading at 647. The straddle here on 1st of January 25 fell to 254 rupees. Okay, so this was a 400 pointer fall, and series on series we have seen such things. Okay, that one straddle which has gone to the extreme peak usually gets knocked and gets knocked bad. Okay, so the same thing I want you to do for March now, because we are just starting with Feb. I want you to do this for the March series. So you go plot your Feb series, okay, and see what is happening that you are already seeing. Do the same thing for your March series and tell me which is the straddle that is short of the most. Okay, and we will track that straddle. Before you take trades on it, you should first feel confident with it, right? So you track that straddle to the next series and see how much it comes off, and from there we will see what has to be done. Is this okay? Yeah, Sangeeta says yes sir. Anyone else? Saundar says yes. Okay, so Abdullah says yes, which is good. Okay. So if you want to make more money, this is the kind of strategies that you pick for shorting, and I'll tell you when to short. Okay, so there are some conditions that we use to pick this strategies to short on the hourly chart. So based on that, we will take it and we will go ahead with it, and we will track it to closure. Okay, so Bank Nifty over here, my friends, is going to follow Nifty. So till now Bank Nifty and Nifty have Bank Nifty performed, Nifty didn't, then Bank Nifty pulled up, then Nifty went up, right? Lot of things. So with budget coming in place, now why I asked you to do this for the March series also is, with budget coming in place, budget is a 5 sigma event for our markets, right? It is a sigma event. So IVs are going to rocket up, means your call and put values are going to just get inflated just like that without doing nothing. Okay, and post the budget, this drop is going to come. It's going to be a mega drop in the IV prices. Okay, so with that, that straddle is going to fetch you a lot of money if you played it right. That is why I want you guys to get a feel of it, and this is not going to happen again till the next year, right? So see how straddles behave on the budget day. This is very important. That is why I wanted to give you this activity as an assignment so that you track it. It makes you a better trader, nothing else to it. And Bank Nifty is again going to have wild swings on budget day. It is a given. Usually Bank Nifty swings are to the tune of 700 to 900 points on the budget day. This time it's going to be no different. It's going to be the same. Okay. So the thing is, if you cannot handle such wild swings, sit on the sidelines, track the straddle, short the straddle, and will make the money there. The end motto is money should be made. Doesn't matter from where it is coming from. Okay. So we'll take it and we'll do it that way. Is this clear? Yeah, guys. Okay, all right. So for next week, I'm making another video which I'm going to give it only to CFS members on stocks. Okay, stock identification for your positionals and your swings is what I'm making. It is in the process of getting through. So once it is through, I'll publish it to the group. It can come on Tuesday, latest Wednesday. Okay, so please use it and trade stocks based on it. So we will have more meaningful discussions on stocks. Okay, I will end the seminar here. It's already 11, so we'll stop it here. As usual, I'll be available in the morning during the market hours, and we'll see how the market goes from there. Okay, thanks for making it to the webinar. Good night, folks. Talk to you in the morning. All right, bye.